Welcome to this training session on the RBI directions on debit cards, issuance, and conduct for rural cooperative banks. These directions are particularly important for state cooperative banks and central cooperative banks. In this session, we will understand the key requirements relating to debit card issuance, customer protection, co-branding, grievance redressal, data confidentiality, and regulatory compliance. But more importantly, we will translate these regulatory requirements into practical actions for bankers and branch-level officials. The objective is simple: issue debit cards responsibly, protect customers, protect customer data, and ensure continuous regulatory compliance. Let us begin. Let us first understand why these directions matter. The Reserve Bank of India has issued these directions under Sections 35A and 56 of the Banking Regulation Act, 1949. They apply to rural cooperative banks, which means state cooperative banks and central cooperative banks. The directions came into force with immediate effect on November 28, 2025. They cover conduct-related requirements for debit cards, including co-branded debit cards. One important point is that these directions should not be viewed in isolation. They need to be read together with other applicable RBI requirements relating to prudential norms, payment systems, technology, cybersecurity, KYC, and outsourcing. So, the objective is not simply to issue more cards. The objective is to issue cards responsibly, securely, transparently, and with proper customer protection. Before going into the detailed requirements, let us understand a few important terms. A cardholder is the person to whom the card is issued, or a person authorized to use it. The card issuer is the bank that issues the debit card. A debit card is a physical or virtual payment instrument linked to a savings bank or current account. It can be used for cash withdrawal, payments, point of sale, or QR transactions, and fund transfers subject to applicable conditions. A form factor is an alternative physical or virtual instrument that can be used instead of a conventional card. For example, a wearable device. A co-branded card is issued jointly by the card issuer and a co-branding entity and carries the names or brands of both entities. Finally, a convenience fee is a charge for using a debit card as an alternative form of payment. These definitions are important because they determine how the detailed regulatory requirements apply. The first major requirement is the board-approved policy. Every rural cooperative bank issuing debit cards should have a comprehensive policy approved by its board. The policy should cover debit card issuance, co-branding arrangements, blocking and deactivation procedures, the time period for completing formalities after a lost card is blocked, and grievance redressal and compensation. This is important because debit card operations should not depend merely on branch-level practices or individual discretion. The board-approved policy provides the overall framework. Branches, operational teams, and customer service teams must then follow that framework consistently. In simple terms, good debit card governance starts with a good board-approved policy. Now let us answer a very practical question: who can receive a debit card? Debit cards can be issued to customers having savings bank or current accounts. Prior RBI approval is not required for an eligible rural cooperative bank to issue debit cards, provided the bank has the required board-approved policy and follows the applicable directions. At the same time, debit cards should not be issued against cash credit or loan accounts. There is an important provision relating to overdraft facilities provided along with Pradhan Mantri Jan Dhan Yojana accounts or Kisan credit card accounts. Such permitted accounts may be linked to a debit card, subject to the applicable requirements. Another critical customer protection requirement is this: a customer cannot be forced to take a debit card. An issuance of a debit card cannot be linked to obtaining another banking facility. So remember this principle. Eligibility does not mean compulsion. Debit card compliance does not end when the card is issued. The RBI requires the bank to undertake a half-yearly review of its debit card operations. The review should include analysis of card usage, including cards that have remained unused for long periods, and the risks associated with such dormancy. This means banks should periodically ask which cards are being used, which cards are inactive, are there unusual patterns, and what risks arise from dormant cards. The directions also recognize new payment technologies. Banks may issue alternative form factors, such as wearables, either instead of or in addition to a plastic debit card. However, this requires the customer's explicit consent. Technology can evolve, but the fundamental principles of customer choice, consent, security, and responsible banking remain unchanged. Let us now look at co-branded debit cards. An RCB does not need prior RBI approval to issue co-branded debit or prepaid cards, subject to the conditions prescribed in the directions. However, there is a critical restriction. An RCB cannot enter into a tie-up with a non-bank entity for issuing a co-branded debit card. The co-branded card must clearly indicate that it is issued under a co-branding arrangement. It must also prominently display the branding of the card issuer. The co-branding partner cannot market the card as if it were its own product. Revenue sharing arrangements between the bank and the co-branding partner must be disclosed to the cardholder and published on the bank's website. A bank may also partner with more than one co-branding entity for a single card. The key message is simple. Co-branding is permitted, but governance, transparency, and accountability are essential. Co-branding also brings additional risks. These include reputation risk, operational risk, and data security risk. Therefore, the bank must conduct appropriate due diligence on the proposed co-branding partner. If the partner is a financial entity, the bank must ensure that the partner has obtained the necessary regulatory approval for entering into the arrangement. Another very important principle is the data firewall. The co-branding partner must not have access to information relating to transactions carried out through the co-branded card. In limited circumstances, transaction-related information may be displayed to the cardholder through the partner's platform in encrypted form. However, the information should not be accessed or stored by the partner. Most importantly, the card-issuing bank remains responsible for the acts of the co-branding partner, as well as compliance with applicable outsourcing requirements. Therefore, never treat co-branding merely as a marketing arrangement. It is also a risk management and data governance responsibility. Now we come to one of the most important operational areas: lost, stolen, or misused debit cards. Customers must have convenient ways to report a lost card. Banks should provide clearly publicized reporting channels, including a helpline, SMS, email, IVR, and digital channels such as internet banking or mobile applications as applicable. Once a customer reports a lost card, the bank must act immediately to block the card. Paperwork or other formalities may follow according to the bank's approved policy, but blocking the card should not be unnecessarily delayed. The customer should also receive confirmation after the card has been blocked. Remember also that customers should not receive unsolicited cards or renewals without their request or consent. Rewards and benefits should be transparent, and debit card insurance should not be made mandatory. The practical message for every branch is simple. When a customer reports a lost card, act first. Block immediately. and complete the remaining formalities without delay. The relationship between the bank and the cardholder is contractual. Therefore, the terms and conditions governing the debit card must be fair, clear, and understandable. The RBI requires the terms to be expressed in clear and simple language. Preferably, this should include English, Hindi, and the local language. Banks should not impose charges that were not properly disclosed and consented to at the time of issuance, subject to applicable statutory charges. If a convenience fee is applicable, it should be clearly disclosed before the transaction. The terms should also specify the timeline for reversing failed transactions and the compensation payable if the specified timeline is not met. If the bank changes the terms, the customer must receive 30 days notice, along with an opportunity to withdraw if the customer chooses. Finally, the bank must handle PIN issuance securely. Customers also have a responsibility to keep their PIN confidential. The guiding principle is simple: no surprises for the customer. A strong grievance redressal mechanism is a critical part of debit card governance. The first step is simple. The customer approaches the bank. The bank should have a designated grievance redressal mechanism with complaints properly acknowledged and tracked through a complaint or docket number. This should apply even when the complaint is received over the phone. If a complaint is not resolved at the initial level, there should be an automatic escalation mechanism to higher authorities. Most importantly, if the bank does not respond within 30 days, rejects the complaint wholly or partly, or the customer is not satisfied with the resolution, the customer can approach the RBI Ombudsman. The bank may also be liable to compensate the customer for loss of time, expenses, financial loss, and harassment or mental anguish caused by the bank's fault, where the grievance has not been redressed in time. Therefore, grievance handling should never be treated as a mere formality. It is an important part of customer protection and service quality.
Now, let us look at two critical areas: customer data confidentiality and KYC and AML compliance. Customer information is highly sensitive. The bank must ensure that customer information is not shared with any other person or organization unless there is a valid regulatory, legal, or business requirement, and the applicable consent requirements have been satisfied. This becomes especially important when third-party or outsourcing arrangements are involved. Card and transaction data should not be shared with outsourcing partners unless the information is essential for the function assigned to them. Where customer consent is required, it must be obtained appropriately. The ownership and control of card data must always remain with the card-issuing bank. There is another important requirement. All applicable KYC, anti-money laundering, combating the financing of terrorism, and Prevention of Money Laundering Act requirements must be followed for every debit card issued. This includes permitted co-branded cards. The bank must also maintain proper records so that card transactions can be traced, exceptions can be identified, and errors can be rectified. The key message is simple: protect customer data, follow KYC and AML requirements, and ensure that every card transaction remains secure, traceable, and compliant.
Let us now convert the regulatory requirements into practical actions for bankers. First, ensure that the debit card, co-branding, blocking, and grievance policies are properly approved by the board and kept updated. Second, issue debit cards only to eligible customers and always obtain the customer's free and informed consent. Third, make the 24/7 lost card reporting channels clearly visible. This should include the helpline, SMS, email, internet banking, mobile application, and other approved channels. Fourth, when a customer reports a lost or stolen card, block the card immediately. Do not delay blocking because of paperwork or other formalities. After blocking the card, send confirmation to the customer without delay. Fifth, clearly disclose all charges, convenience fees, rewards, cashback benefits, and co-branding arrangements wherever applicable. Sixth, ensure that unresolved customer complaints are escalated through the prescribed grievance redressal mechanism. Customers should also be informed of their right to approach the RBI Ombudsman when applicable. Finally, conduct the required half-yearly review of debit card operations. Pay particular attention to cards that have remained unused for long periods and the risks associated with such cards. These actions may appear simple, but when they are followed consistently at every branch, they create strong customer protection and regulatory compliance. In short, issue responsibly. Protect customers.
Now, let us look at the practices that bankers must avoid. First, do not issue debit cards against cash credit or loan accounts, except where the specific permitted exceptions apply. Second, never force, pressure, or bundle debit card issuance with another banking facility. A customer must have a genuine choice. Third, do not dispatch a fresh or renewed card without the customer's request or consent, wherever such consent is required. Fourth, do not enter into prohibited co-branding arrangements, and never allow a co-branding partner to access transaction data in violation of the applicable requirements. Fifth, do not levy charges that were not properly disclosed and consented to at the time of card issuance, except where applicable statutory charges are involved. Sixth, do not change card terms without providing the required 30 days notice. And finally, never share customer or card data with a third party or outsourcing partner unless the sharing is permitted, necessary for the assigned function, and all applicable consent and security requirements have been satisfied. There is a simple principle that every banker should remember. Do not compromise customer choice. Do not compromise transparency. Do not compromise confidentiality. And do not compromise regulatory compliance. When in doubt, stop, verify the requirement, and escalate to the appropriate authority.
Let us conclude this session with the most important messages. First, debit cards must be issued only to eligible customers and with proper customer consent. Second, banks must provide convenient 24/7 channels for reporting lost or stolen cards. And when a card is reported lost or stolen, it must be blocked immediately. Third, all terms, charges, convenience fees, rewards, and benefits must be transparent and clearly communicated to the customer. Fourth, banks must maintain an effective grievance redressal and escalation mechanism. Fifth, co-branding requires strong governance, due diligence, customer protection, and strict control over data access. Sixth, customer and transaction data must be protected, particularly when third-party or outsourcing arrangements are involved. Seventh, banks must conduct the required half-yearly review of debit card operations and take corrective action wherever risks are identified. And finally, debit card operations must remain fully aligned with KYC, anti-money laundering, combating the financing of terrorism, Prevention of Money Laundering Act, and other applicable RBI requirements. The larger message is very simple. A debit card is not merely a payment instrument. It is a customer service responsibility. It is a risk management responsibility. And it is a regulatory compliance responsibility.
When cooperative banks issue cards responsibly, protect customer information, respond quickly to customer complaints, and maintain strong controls, they build something even more important: customer trust. Thank you for watching. Stay compliant, protect customers, and continue to build trust through responsible banking.